Welcome back. If you've just joined us, you're watching Business Morning on Channels Television. And as I said earlier, our conversation this morning is centered on development finance, looking at the issue of the planned privatization of Bank of Industry and Bank of Agriculture. And I have here two gentlemen with me, the head development finance, Heritage Bank, Mr. Segun Akonji, and of course the CEO, Cowry Asset Management Limited, Mr. Johnson Chukwu. Thank you very much for joining me this morning.
Good morning.
Good morning. We're talking about development finance. Well, let me start. Did it actually come as a surprise when the head of the Bureau of Public Enterprises actually mentioned that it's in the pipeline, one of their plans for 2014, to actually, what he said is partial privatization of Bank of Industry and Bank of Agriculture?
Well, for me, it didn't come as a surprise because you have to look at the objective of the partial privatization. And the key word there is partial privatization. You see, the key thing is that these institutions are development finance institutions, but they are limited in terms of funding by the capacity of the government to provide capital to them. And what the government wants to do is allow them to attract private capital so that they can expand their coverage area, the number of customers they can attend to. Today, they are stymied or constrained by the fact that they cannot access private capital. And therefore, the ability to carry out their primary objective of providing capital support to those sectors of the economy that are considered critical, that may not be able to go to the conventional financial institution to borrow, is highly limited by the fact that they don't have access to private capital. And that's why the government said we are going to carry out a partial privatization to allow for the injection of private capital into the capital base of these institutions.
Yeah, Mr. Konji, you are, well, I would say an expert in development finance. What's your thinking there?
Well, one is not a surprise. It's something we've seen around the world, and essentially it opens vistas of opportunity to an institution to be able to leverage in terms of knowledge, aside the capital itself, access to knowledge, wider access to knowledge, competitiveness. And then, of course, it's when we talk about the knowledge side of it, it's about not just talking about pricing of the funding that's available to them, but the structuring of finance for development. Because most of the time what we do is we think that the cost of the money is what the focus of development finance should be. But you are able to have access to knowledge that helps you to understand structures that fit different kind of asset that you want to fund, or institutions that you want to fund, infrastructure that you want to fund. So that's very critical. And at the moment, I have not seen that being available in the current DFIs that we have. So once you open them up to this kind of access, they are able to draw this kind of opportunity into the institution, and they're able to service the economy better and support the performance of government better than they are doing now. And above all, you bring in performance and efficiency, which is not available now. You check out, we haven't seen their financial statement in a long time. And then when the financial statement even comes out, what you see in relation to the capital that's available, pardon me, I would say is suboptimal in terms of the return that comes to government.
Now, do they have to really privatize these banks? Can't government actually, support them? Do they have to really privatize them? Because a lot of concerns have been raised about this.
You see, what is the role of government in modern economy? The role of government in modern economy is not to run business. Government is stepping back to provide the platform for setting up businesses and possibly now what you could call the role of government is facilitation of opportunities in the economy. And once you have been able to nurture that economy to a point, what is efficient to do is move them on to capable hands that would be able to help you realize the benefit that you actually had in mind. Secondly, if you check financial crisis globally, private institutions, they do collapse. But government institutions, when they collapse, we seem to cover them up. Check out the People's Bank and all of that. We've seen quite a number of government financial institutions either integrated due to efficiency, open them up again, close them up. They never really deliver. So what you can do is government to provide regulation, platform for growing them, and then of course it's not limiting government to support them. Now what it means is that the resources available to government to support them will be provided, but other sources will be open to support that. Look at the newly formed NMRC, for example. Government is putting in some money. The IFC is coming in to put in some money. Banks all over the country are putting some money. Now, the level of stakeholdership is widened beyond government. That way, people are able to share knowledge with them. People are able to support them more because we now have expectation of what they should be delivering to us, more than when it is just government. More people question the operationality of such institution, more than what it is when government alone runs them.
Right.
Okay, let me chip in a few things. You have to look at the primary objective, like why government set up the financial institutions. One of which is that they feel that the sectors that they want to stimulate may not easily attract credit
from the commercial
banking sectors. Two is that the government feels that one, in some instances, that the private sector will not want to provide capital because of suboptimal return in those sectors. And government considers those sectors are critical to the economic development of the country. So those are some of the reasons why government want to invest and own the remaining financial institutions, which is with what brings us to the concern you have just expressed, that if these companies banks are privatized, would they still be able to accomplish the primary objective for which they were set up? Which is one, provide funding or capital to sectors that are critical to the economic development of the country, or provide finance to sectors that may not be as competitive but are still relevant to the economic well-being of the society. I think some of and that's why the government said that we're going to carry out partial privatization, which means government is still going to own controlling stake in those entities. But then the fact that the private sector now are key co-owners of those entities, the entities will be able to go to the capital market and raise long-term funds. Take, for instance, none of those development financial institutions can issue bond today. We're seeing Nigerian banks raise euro bonds. For instance, a bank like Bank of Industry should be able to borrow both locally and internationally because some of the sector they support are export-oriented. And that's why of recent, in January 2013, they got a 500 million credit line from African Development Bank to support lending to sectors that are export-oriented. But by the time they have private capital come into their ownership, they'll be able to raise long-term funds. Like a couple of Nigerian banks just raised Eurobond recently. And those Eurobonds range from tenors of 5 to 7 years. And the rates, the cost of those funds are sub 10%. So with that, they can support further the primary objective of lending at rates that are suboptimal. You see, we must not lose sight of the fact that, look, there are sectors that cannot borrow at commercial rates, that are very keen. But government can design financial models. Take, for instance, the issue of agriculture. If you look at the back of agriculture, the government has come up with the partial risk guarantee scheme to de-risk partially the exposure that banks have when they're lending to the agricultural sector. And they have provided about 200 billion which banks have lent to the agricultural sector, not necessarily through the Bank of Agriculture. So by the time Bank of Agriculture becomes a partially private sector owned entity, they could actually explore more of such government guarantees or credit guarantees and then expand their coverage than what they have today.